So let me recap again. The disciplined trader is something that's overlooked a lot. You get a lot of strategies that are thrown out there. You get a lot of information about how to buy, sell, how to put spreads on, wherever you're trading, options, forex, whatever it is you're doing. There's a lot of strategies, and it said, hey, this is the great strategy. And some of those strategies are really, really successful. I mean, they work very, very well. The issue is not whether a strategy works. The issue is in your executing the strategy successfully, because if you don't have a successful plan for you to take the strategy and make it your personal trading plan, and the discipline to follow that plan with all of the aspects that are involved in making a trading plan work, you will fail. And I can tell you, I failed myself. Many of us, I'm sure many of you have been through a process where you've tried something and it's not worked out the way you envisaged or you saw it happening. And that is where disciplined trading comes in. I've got a nice little cartoon up here. I found this site where they do these cartoons. I've got a guy who actually creates cartoons for me on the market. He's a trader, so he's quite successful, and he understands some of the aspects that go into being a successful trader. And this little cartoon here is quite nice because it's got, just someone sitting in front of the TV. And isn't this true, right? When you watch some of those shows, I mean, how many of you have seen some of those shows where they're talking about what's happened, what's going on? And here, it moved higher today on rumors that the market would move higher today. They rechurn the rumors. They rechurn the same news. They pass the news around. They bring in the talking head to say this, the talking head to say that. Not like Richard, who's a smart guy and has something good to say, but you get a lot of this, they react to what's already happened, and then they try and explain what's already happened. And that type of information is one of the things that distracts traders from making successful decisions, is all of this noise and information. And that's something that I will be covering, certainly on our coaching programs, about how to avoid all of this and how to avoid being distracted and just focusing on the core things you need to do to be successful with whatever strategy you are trading with. That's the other one. This is the one I like. Yeah, this is what they do, isn't it? Welcome, should have, would have, could have, the investment hindsight show. I think it's a great name for a show because that's what they do. They tell you the same thing. Yeah, today Apple's up 20% over the last week. Hey, that's really nice to know. Well, you could have told me that at the beginning of the week, then I maybe would have been able to take advantage of it. You don't see that. You just won't see that. So a lot of this noise. And that's really where our trading prism paradigm comes in. We think of it like a prism. You know what a prism is? You get a big beam of light coming in from one side. It's a giant white light. It's tons and tons and tons of information. That kind of symbolizes the market. That comes in one side. Out the other side of a prism, it's separated into the different components and colors. So we kind of think the process that we're trying to do here is to take all of this information, trading strategy, noise, sort it out into logical segments so that you can make a trading decision and at the same time learn the discipline to make that decision work to make money. So that's where the trading prism comes from. So what I've got here, I've got a couple of things I'm going to talk about. There's two factors in disciplined trading. These are probably the most common things that you'll hear if you've looked at psychology of trading. It's the most common things. It's the two things that really everybody feels when you're trading. It's good things to feel. It's managing these things that makes the difference. And the two things are fear and greed. I disagree with people that say you have to get rid of fear. Fear is a good thing. Fear is how you deal with things that are going to harm you. It's a stressor. Now, those types of things, you can't just make them disappear. You can't be a blank face and not feel the effects of it. If you do that, then you'll end up, you can walk off the edge of a cliff because you have no fear. That's the same type of thing. What it's about is managing the fear, using that fear and managing it, making it into something that's like, okay, I know there's a problem here. I'm fearful for losing money on a trade I might be in. However, if I have a disciplined strategy in place and I have a strategy that I've already learned and I've actually practiced with, then I can go back to that strategy and say, okay, I'm fearful, but I know I have these foundations in place. It's like wearing a seatbelt and having airbags in a car. You know that if you have an accident, there is some degree of safety there. So if you are driving in snowy conditions, like it's been here the last couple of winters, you know that you have some degree of safety built around you in a car. And it's no different with trading. By having a disciplined trading strategy and implementing that, that gives you a degree of safety net when fear raises its ugly head, because it will do. I mean, remember last year, that day in the US when the Dow was down, what was it, the 900 points, almost 1,000 points during the trading day? Were any of you in positions to the long side during that time? If you were probably sitting there thinking, what is going on? But if you're a disciplined trader and you have a strategy, one of two things would have happened. One, this would not have affected you because your strategy would have said get out, and you would have got out. You might have lost some money on the position, fair enough. But if you have a strategy that is effective and you've worked through and you've traded using paper money on a simulated account, you know that your strategy, while it may not win all the time, if you follow the strategy and you follow the rules, you'll be protected from making huge losses. And that's really what being a disciplined trader is about. And it's overcoming, it's not overcoming, it's managing that fear, those factors. So what I'm going to show here is Diary of an Average Trader. And this is fear. And you may recognize some of these elements that happen, I think, to a lot of us. So first off, you get into trading, okay, whatever it is you're doing, well, whatever spreads or CDFs or Forex, whatever it is you're trading, we've all had these things happen. You get a small loss. You made a trade. It's like, okay, I'm in there. I'm a little nervous about what I'm trading. It's not going as I hoped. Hoped, I underline. Hoped is not a great word to have in trading. Okay, it's not going as I hoped. What was I hoping for? I have a strategy. It's like a business. It's going to do or it's not going to do. Hoping that it might go to the moon and I'll make a fortune isn't going to make it happen. So you lose a little bit and you bail out and you put it down as part of the learning curve. Right, so we've done that, right? Everybody's been down. Who hasn't had a losing trade? Everybody's had a losing trade, right? I mean, that's part of the process of trading. So you had a losing trade, and then this happens. Has anybody seen a perfect setup and you've really gone for it, right? You've seen that happen? Where you've just like, this is a great setup, and it's all the pieces are in place, whether it's a strategy you've got from somebody else or whether you're with a group who's trading the same way, whatever it is, it's a great strategy. You can hear the cash till ring, and this is going to be the one. So you put your position on and you wait. And then this happens, right? You get the trade turns against you. It was a perfect setup. That's okay. That happens. This is where you get out of that disciplined world, and this is why so many people come into trading and then stop trading or get out of it, because you get into this. Well, I have to give it a little room to work out. What does that mean? That has no relevance to an effective trading strategy and implementing it with a disciplined approach. When you have an effective trading strategy, you know where your stops are, you know where your targets are, you know when you can get out. Those things, and actually following that process, are what make the strategy work. Because you could have one strategy and everybody in this room could be trading that same strategy, even if it was every single one of you bought the same position, all of you would make different amounts of money or lose different amounts of money because you exit or enter the positions differently. Some of you will get out differently. It's following a strategy and sticking to the rules that you have in the strategy that makes the difference. So you get this. It's like, okay, so it turned against me. It was looking great. I'm sure it's going to be good. But the trade keeps dropping. We've seen that, right? It keeps going. It was a perfect setup. You liked it at first price, and now you've got to love it. It's gone down a bit. Maybe I should buy some more. We've seen that, right? People just jump in, buying on the way down. So you're lowering your cost average of a position, whatever it is. It's like, wow, now I can get it for 20% less than I got it earlier in the morning. That's fine. So I've now lowered my cost average, and it's like, okay, I'm feeling a little bit better on that. Again, these are the sort of emotions that come out when you get into trading or when you're relatively new into trading. And all of us feel some of these emotions. It's getting past these emotions that's the key to success. So here we are. I'm hanging in there. I'm thinking, well, okay, I still like the setup. It looked great. This is perfect, but it keeps dropping, and now I'm really feeling it. Wow, I've lost 20% on this position. Each day it gets worse. then you start looking around for someone to support your decision to stay in a position. And people sit in chat rooms and say, hey, yeah, I'm in there. Oh, yeah, I bought it. It's 20% down, but I know it's going to go up. I'm hanging in there. So all they're doing is just supporting their own position because they want it to go up, regardless of what your trading strategy is really saying you should do. This is the worst type of trading you can do. So now you felt the pain, now you've lost some money, but now you're looking for support to actually reinforce your position that says, okay, I'm holding an edge, but there's other guys, so we're in a shared misery together. So now every morning you wake up and you're dreading, how much is it going to go down today? You get sleepless nights and it becomes too much, and eventually it's like, I'm getting out of this. I might lose 25% on the position, and then you start looking at yourself and say, I thought it was perfect. How stupid could I be to have entered that position? This happens all the time. I mean, you get in there and now you feel hurt. Now you feel like you've made a decision. Now you have fear. You're fearful of your own ability to trade. And really what the key to all this is the fear. Now you're determined to never let this happen again. But you're determined to let it not happen again in the worst sort of way. Now you're feared to actually go into position. The setup looked great, but oh my God, I lost 25% on that position. So you feel that pressure all the time when you try and do another decision. So any setup that looked as good as it did last time, you think, well, maybe I'm going to lose another 25% on that position. Or when you get into a position and it starts making money, you're like, oh, I've made back that 25% that I lost in that first position. Hey, I'll get out and break even. You know that feeling, right? I mean, that feeling is there. And it's like, yeah, now I'm back to break even. Phew. Worst type of thing you can do for trading. Every position is its own single position. You cannot compare it to what your other positions did. You know, doing that sort of thing, you end up not going anywhere. You won't make any money, and then you'll just go, you know what, this trading is just no good. I'm not going to make any money trading. So that's what happens with this fear factor. You become fearful of every decision you make because you didn't follow a system. Once you have a system, and Richard's got some great systems, you follow the system, we can show you how to take that system, make it your system, and then trade it and learn how to analyze the trades, learn how to see where your weaknesses are as far as what it is I do right and what it is I do wrong, how to trade in an environment where you're secure. When I say secure, and that's secure from distractions. If you work at home, for example, or if you trade at home in the evening, say you're trading the currencies in the evening, and you've got the TV on in the corner, and over here you've got maybe you've got a member of your family or a significant other coming in and asking you questions while you're trying to trade. What do you think that's going to do to your trading? It's like as if you were driving a car and someone keeps tapping you on the shoulder and you keep turning your head around. It's dangerous. So we cover some of that as well, about how to create a safe trading environment. It's like driving. There's a lot of different things that go into driving that a lot of us have learned over the years how to drive safely. Those same types of things apply to trading. You have to create an environment where you're safe. All the factors that go into making that happen apply to trading. You get yourself into that zone, no distractions, follow a set of rules, and fear is managed. Fear will be managed. Cloudy. I love this cloudy. So yeah, your judgment is clouded. That's really what's happened here is that you're no longer able to trade objectively because you now have psychologically this fear of losing another 25%, the fear of the position going against you because you don't have a foundation to build on. You don't have any secure set of rules that you follow. So it'd be like putting a 4-year-old behind the wheel of a Bentley and let them drive down the street. They're going to crash into everything. If you don't have any rules, if you don't follow a set of rules, then you will end up like this. Your judgment is going to be completely clouded. So I'm sure everybody's trades some sorts of instruments, right? I mean, how many people trade stocks? How about options? Who trades options? How about Forex? Who bets on the horses? I mean, there's a lot of ways of trading. What we teach and strategies we teach for like coaching programs, we have a stock and an options coaching program. The rules that apply as far as disciplined trading is concerned applies to anything. I mean, it applies to anything you might be trading. It's all about managing the emotions. It's all about being disciplined and executing your strategy and following those rules and being in that safe trading zone. You know, when I trade, I'm in my office, the door's locked. No one comes in, even the dog doesn't, well, the dog does come in occasionally. And that's a distraction too, I shouldn't do that. If you're trading, what hours of the day do you trade? Are you working? You can't be a day trader and work, right? If you are, one of those two jobs is going to suffer. Either your day trading job, because it's a job, I consider trading a job. It's a business or a job. Or your whatever your full-time work is. You can't do both at the same time. You need to have a really objective view of what it is that you're trying to achieve with trading. If you're going to trade, you have to fit it into your lifestyle. And I've discussed some of that on the coaching course. How do you evaluate your lifestyle and make your trading fit in with that lifestyle so you can do it effectively? That's really what it's about. And this is what happens to a lot of people. You hear about it. Hey, you know, so-and-so's making a lot of money in the market. I'm going to go in and try it out. They run through a couple of trades just like I did here. And this is what happens. They jump out, they disappear. And yet, a lot of professionals, when I say professionals, I'm not just talking about money managers, brokers. I'm talking about successful individual traders. I call them professionals because they are. Because they consider it a job or they consider it a business. And that makes them professional in my mind. They are professionally trading their own money. And they keep on trading day after day, making reasonable returns. We're not talking about making 10,000% in a year. We're not talking about that. Those pie-in-the-sky type things happen once in a while. There are times when you can make a lot of money just by accident. It just happens that way. That is not what trading is about. Trading is a marathon. You're talking about a continuous process of taking your hard-earned money, investing it in whatever types of instrument you trade, effectively getting out of losing positions, letting the positions that are win move to the targets where you have set a target for profit, and then getting out. After that, I don't care what the thing does. I don't care if it made 10,000%, because I know that's an oddity. That's a rare occurrence. What we're looking for is the consistency of a return. You trade it, you wait till it hits the stop, you get out. And part of what I do when I'm trading, and I record my trades, and the reason I get in and get out, I make sure that follows my trading system. And that's the important thing. I don't go back afterwards and say, oh, you know what, I had calls on Apple, and I only made 25% on these calls. If I'd held them for another 3 days, I could have made 300%. And we've all seen that. You all feel that, right? You felt that before. That's the sort of thing you have to overcome. You have to manage that. It's a matter of you follow your system, you take the money off the table, and you'll always leave something behind. Not always. Nobody can really time themselves to get out the top of a move. But if you take your system and you apply it and you take your profits out each time and you close out your losing trades, and you're going to make some losses, then you keep following the system, then your nest keeps building. And as you build your money starts to grow, then you have to adapt how you trade as well, because the more money you have, the more you have to think about position sizing. How many open positions can I handle at any given time? All of those factors come into play. And it's all something I teach in the coaching program on the disciplined trader side. I won't talk about strategies. I'll leave that to the man who knows a lot about strategies. I have my own strategy, and I love trading options. I trade options on stocks and on indexes and on ETFs. I mean, that's what I normally trade. Straight puts and calls. I like consolidation breakouts. That's me. That just happens to be what I trade. But I know what I do. I know what I'm looking for, and I take my money and I go away. I don't come back and go, what if I did this? Or what if That part of the process comes earlier when you're trying to evaluate a strategy. You don't deal with that. When you're trading, it's like with a business. You don't set up a business, start running it, and then within the first few hours decide to change the business around. Well, maybe we won't sell shoes now. Why don't we sell umbrellas? You don't do that. You do all of the work before you start your business. You find out exactly what the marketplace will support. You find out, what sort of price points you can deal with. All of those factors come into play before you start a business, and it's the same with trading. You get all of these things lined up beforehand before you start trading, and that's how you become an effective and disciplined trader. So let's look at some of the fear factors. These are the things that cause traders to lose and then stop trading altogether. Fear of losing money. We all have that. But with an effective trading strategy that's actually implemented with a disciplined approach, that fear goes away because you know you're going to be stopped out for a small loss rather than playing this chasing the money down and hoping that you'll get back to break even. Fear of missing out on a great move. That's the thing. Okay, every day you hear it, whether it's Bloomberg or Sky or CNBC, whatever it is that you might have on the TV. Here's the top gainers. They show it all the time. Such and such stocks up 35% in the last 2 days. That's very good. What are they doing? They're entertaining us is what they're doing. It's an entertainment show. It doesn't impart information for me to make a trade. If you go in there, if you went in and you took and looked at all those top stocks that they talk about, such and such up so much this week, most of them, if you jumped in after those 25% moves, they're probably going to pull back. I bet there's an effective strategy to go short or buy puts on stocks that have been talked about on those sorts of shows. This is a different type of show from what Richard does. Richard's an insider. We're talking about Reuters TV. What he does is inside to guys who are pretty much effective traders already. He's just imparting more information. And if you've seen some of his shows, they're really, really very good. I mean, we're talking about solid, concrete, technical analysis. His cloud stuff, his pointed figure is all right on the nose. I mean, that's very, very good information. That's not what I'm talking about when I talk about missing out on a great move that's been mentioned on the TV. Then you got the fear of letting a profit become a loss. This happens all the time because you're chasing after the profit. I'm up 5%. Well, I think it can go even higher. And then you start thinking, well, maybe I should get out of the position now before I lose it. Stick to your rules. If your profit, if you have a trailing stop, for example, on a position that says it's going to go, once I make 5%, I'm going to, pull out of the position when I give 20% of that back. So that's 4% gain. If that happens to be your strategy, stick to it. Get out then. Don't let this get in the way of your trading action. The fear of being wrong right from the start. And that happens because you didn't follow your rules. If you start trading, and I've had this question asked before, everybody starts trading a particular strategy or instrument somewhere. What's going to happen is, if you start trading in a really good marketplace that's on the side of your strategy, so for example, if you buy calls and the market goes up 20% over the period of a month, and that's your first month for trading, what's going to happen? You're going to feel you're fantastic, right? Because you're right. So you're going to feel great about your strategy. However, what if your strategy is in a period where the market's going down or is wishy-washy and all the positions you go into, you make small losses on? Again, there's a different feeling that goes with that. It's managing that and going back and saying, okay, look, I started trading, I made 1 winner and 5 losers. But my winner made me 10%, 15%. Each of my losers lost me 1.5%. I don't feel fantastic, but I followed the rules. And that's the key to this, is you follow the rules. Because you can have as many winners as losers. There are some traders who only have 40% or less winners versus losers. They make a lot of money. Why? Because the losers they get out of and they run away. The winners, they have an effective strategy to either follow the profit trail up and they take out some money off the table at maybe at different stages on the move up. Whatever that strategy is, whatever their exit strategy is, their winning positions make more than their losing positions. And you can get to a situation with 40% winners, 60% losers, and still make good money. It's all about managing it. And the last one down here is fear of pulling the trigger. I think we've all felt that. It's like, oh, it looks good. There's a little doubt creeps into your mind. It's like, should I? Oh, you know what? Wow, the market's really tanking. I'm trying to buy calls on this, or, I'm trying to do this spread, but the market's really, really moving out in one direction, and I don't really like that. Stick to the rules. it's the noise. It's all that information that comes in. It's filtering that information that's key to overcoming these fears. That's why I put fear as our friend. Acknowledge you're going to have fear. Managing it is the thing. When you're trading your own money, this is your money. It's your nest egg. Especially if you've got significant other or a partner or whatever you have, they know probably you've got money and that I would hope to have told them that you're trading the markets and that you have a system. If you come out of your trading zone every day looking like someone's just hit you on the head because you lost a lot of money, that's going to reverberate around. They're going to go, what's happened? What's going on? What's happening here? It's overcoming this. It's managing this fear, and it's dealing with that and saying, look, hey, it wasn't a great day today, but I lost 3% today, but that's okay because I followed my rules and I stuck with my rules. And that's part of what I try to teach is how to get from this massive information, managing it, and putting it on a piece of paper. I have a piece of paper. It's something about this side. I have 3 monitors hanging off of one portable with a special card on the back, and stuck to the side of it with just a bit of tape is my trading rules. And these rules are they're in capital letters in a big, a Sharpie pen so I can read it. I wrote it because I wrote it and made it mine. It's not typed out or anything. I wrote it down. It's got steps. It says what I do, what I buy, when I get out. And I refer to that anytime I feel there's a problem. I'm fearful about the market or what I'm doing. I look at it and go, okay, I know what I'm supposed to be doing. I get out, and there are days when I won't trade. And that's on this list too. And those are days when I have things I have to do, so I can't effectively trade, even though I'm really aching to trade. For example, if you've got a family member who's got to go to have surgery or something, why would you trade when you've got to take them to the hospital and they're in the hospital and you've got to manage other things in the household, for example? Why would you trade? Why would you do that when you have other things that you have to do? You've got to figure out the priorities and say, okay, this is my trading time of day. Yeah, but there are other things I have to do. We won't trade today. That happens. You stick to the rules. So successful trading, it's not about overcoming, it's about managing. And I keep saying the other again, it's managing the fear, because it's always going to be there. Oh, come back. Okay, managing fear. Write out your trading plan, which is what I have. And that includes, exits, entries. It includes when I shouldn't trade. As I say, if there's things going on, I won't trade if I cannot be there in my zone without distractions. Have your plan with you when you trade so you can refer to it. As I say, it's right there. I can read it. There it is. There's my plan. Okay, I know what I'm supposed to be doing. Good. Am I sticking to that plan? I've fallen off the track. And that includes letting profits run that I shouldn't. I'm supposed to exit. I didn't exit. So I've made more money than I would have if I'd exited using my strategy. Is that a correct thing to do? No. I might make more money, but it's wrong. Because the next time I do that, I'm probably going to end up with a loss on the trade, and now I've fallen completely out of my trading strategy. It's sticking to that makes it work, that makes the discipline of sticking to that plan is what's important. So foster a strong desire to master your emotions and prevent them from affecting your performance. That takes a little time, and that takes practice. And really what it is that the emotion of the market, all of that fear, the greed that drives the market in whatever direction it might be going, you recognize it, you manage it, but you don't let it overcome you. You stick with your plan. You keep going with your plan, you keep trading it, it'll work. And the last one I've mentioned earlier, treat your trading like a business. It is a business, right? If it's your money and you're trying to make it work for you, what's the difference between that and investing it in someone's business, hoping that you'll get a dividend on a return? It's no difference. It's a business. When you're working, we've all worked in different things, I would think, in our lives. When you're working, you're in a professional environment. There are expectations of your work level and what you're expected to do. And in return for that, you're paid a salary. You're paid money in order to be professional and do that job. And the goal is, for whatever enterprise it is to make it successful and go forward. There's no difference with trading. You're trying to make your trading a successful business, a successful, profitable business into the future. So treat it like a business. That's fear. Fear is the one side of the equation. And there's a lot of it out there. The other side is greed. Greed is the other good thing. Greed's good if it's managed. It's not good if it isn't. It's not, greed is what drives the market. Whether you like that or not, that's what really drives it. People want to make money. That's why people buy stocks, why they invest in leveraged objects, why they buy currency pairs. You're interested in making money, and that's the greed factor. Now, the greed factor comes into play when it overrides all of the disciplines of your trading system. That's why I got this cartoon up here. Impulse investors welcomed. I guess it's kind of like a brokerage place. What I call chop shops in the US, where they used to take day traders off the street. People would come in and learn day trading in 3 days. Hey, you get a 3-day course, you spend £5,000, we'll make you a day trader, then you come into our shop and you'll day trade with them with your money, your own money, and guess what happens? They make a lot of money off the course, they make a lot of money out of all the trades that you go in and out of in the day, and then you lose and you're out of there. Those are impulse investors. I mean, that's what it is. They want to go in, they'll say, oh yeah, this looks good, let's buy this, let's sell that. That's a greed factor. That's what drives those sort of people to do that, is that I want to get rich quick scheme. And I've turned people away when I've been working, doing AIQ. I've had people come up to me and say, this is great, I want to make this much money out of this. Like, this is not about get rich quick. It's about an incremental strategy that you implement and keep making gains along the way. You're going to lose a bit, gain some, lose. As long as you're gaining ground, it takes time. And as you grow your portfolio, you change the way you trade a little bit because your portfolio gets bigger. There are guys who trade penny stocks, for example. You know what penny stocks are, right? They're really small, maybe trading for a few pence or a few cents, and they're looking. They look at it, it's like, I can buy 10,000 shares and it's only going to cost me £500. And but I know if it goes to $1, I'm going to have £50,000. Yeah, but guess what? It also goes down 1 or 2 pennies and you just lost half your money. And they're looking for a get rich quick solution. And that's the greed factor. That, again, there are ways of successfully trading penny stocks. Has anybody heard of a Timothy Sykes in the US? Yeah, he plays the opposite side. He looks for the pump and dump situation where you've got a bunch of guys pump up the stock, the penny stock, to an incredibly way out their value. I mean, the company is probably heavily in debt, still on venture capital, has no profits whatsoever, and is selling two spoons a day or something, whatever it is they're selling. And what they do is they dump it. They get rid of it. They dump it. They actually go out there and short sell it, basically, and looking to swallow all of that hype that's come into the stock and take the money out that way. But he has a strategy. Doesn't always work, and he's fairly honest about it. But that's a strategy. There's some greed in that, but it's a strategy that he's worked out and he uses. Doesn't work for everybody, but again, this is one of those things where he's taking advantage of the greed factor on the other side, this pumping up of the stock value. You get these emails, hey, symbol A, B, C, D, E, F, G, because they're always long symbols, right? Because they're either, they're trading on some minority exchange somewhere, or they're pink sheets in the US, whatever they are, and it's got like, we've just discovered 20 trillion tons of gold sitting underneath the doorstep of our building, and this stock's going to go through the roof. Buy it now. And that's the pump up. That's the greed factor that happens in that. You see these stocks just rise and rise and rise. The volume goes up and up and up on absolutely no solid foundation whatsoever. It's rumor mill driven. That's the greed in action. That's the sort of thing you have to avoid. You want to keep away from that sort of thing. So this is the diary and average trader with the greed factor. Greed and fear both work together, interact together. So here we are, shoot for the moon. It's a perfect setup. I'm already well up in the position. Everybody's talking about this. That's the thing you have. It's like, If any of you sit in the traders chat rooms, or if you look out on tweet feeds, whatever it is, wherever your information comes in, you see everybody talking about it, and you're sitting there going, hey, I'm in that stock. This is good. I'm in that position. Oh, yeah, the dollar's tanked today. I'm on the right side of this trade. This is great. And it's like that just reinforces, like, yeah, I'm going to make a fortune. Will it ever stop? It's going higher and higher. I'm already booking a cruise. You do. You go, oh, wow, look how much, what I could do with that money. Wouldn't that be great? Oh, yeah, that's great. And now, so you've booked that in your mind. You booked that profit in here, and it's already there. It's like, I've booked this profit. I'm going to make this amount of money. It's like, that's not real money. That doesn't exist. Unless you've taken it off the table, it doesn't exist. It doesn't exist at all. But you can all feel that, right? It's like, wow, 10,000. Maybe we can, have a Christmas in Salzburg this year. I like Salzburg. And we all do that. Then you have this happen, right? It stalls out. I'm way up still. I'm giving a little bit back, I'll wait until it gets back up to that other high. It was there a moment ago. Surely I can just hang in there. And then I can get out and I'll still have enough for that cruise, right? And that's still in your mind. So giving a bit back, yeah. But, that's a sign of a good move up when it gives a little bit back. That feeling is like, oh, yeah, it's giving a little bit back. I know, but that's a good sign. If it kept going parabolic, it's probably going to tank completely. That's the greed in action again. It's like, oh, yeah, I can get back. I'm going to make that money. And then you have this happen. So you've sat in there. You've not followed any exit rules whatsoever, taken any profit off the table. I've lost a lot of the profit, but it's sure to move back to where I have enough to spend a week on the on-guard, say. Maybe I can't afford the cruise now, but, I'm still in profit. I'm a little disappointed with that, but I'm still in profit. So maybe I think about taking it off the table. Oh, guess what happened? It's gone down again, and I'm still in there. I'm on the water, but I hang in there until it gets back to break even, right? That's a common feeling. It's like, oh, I'll get back to break even, and then I'll be satisfied. Look what I've done. I've gone back to break even. This is great. And then I'll exit out of the trade. So that's all the greed side of things. That's like, I want this thing to run. I want to make more money out of it. Look, I'm already booking the profits. And getting past that is another important factor in learning to be a disciplined trader. So here, how do you manage greed? Well, greed focuses potential gain rather than on the potential loss. Everything's about loss. If you think about it, when you're trading, it's about managing your loss. Because you can make money. When it moves up, you have a strategy in place that will take profits off the table. You shouldn't focus on how much you're going to make, because you will make money if the strategy is good and you have effective exit. It's about managing the loss. So every trade you go in is like, what's my maximum amount I'm willing to lose on this trade? If you're an options trader like me, I will immediately, when I trade a position, I don't have stops. Options are incredibly fluid and difficult to put any sorts of limits on getting out of the position. My mental stop is 50% of my initial capital. 50%. That's options, because it's so volatile and moves so fast. If I buy an option on an index and it goes down 50% by the next morning, I'll get out. That's fine. I don't care if it goes up to 400% by the afternoon. It's not important. My stop, my ability to get out and manage my capital, the potential loss, is what makes this work for me. So I'll have 2 or 3 positions in a year that have 50%, 60, by the time you get out, it can be 60%, maybe more. But these are options, so I'm using small amounts of money to leverage, large amounts of price action. So it's potential. It's the downside that you have to think about. It's how much am I willing to, what sort of drawdown do I handle in my trading strategy, and sticking to that. Not I'm 50% down, well, it's probably going to go 50% up in the next hour or two. Hey, I'm already out. Ray, am I running out of time? Huh? 5 minutes? I'm nearly done, really. Okay, stick to your profit exit strategy, even if you leave money on the table. I mentioned this before. By riding a stock beyond your exit strategy, you're asking for trouble, because you're trying to do it again and again and again. And when it goes wrong, you're just breaking your rules. So one time it goes to the moon and you make 200-300%. Next 3 times you make a loss on that because you didn't exit with a profit. Smart trader always looks at the potential loss and it's a strategy that will protect against it. That's really the same thing as it's the loss that's the important thing to manage. Smart trader will look for other opportunities with manageable risk. If you've got a position and it's in a stock that's incredibly risky, or it's in something that there are incredible risk factors involved, drop it. Move on to something else. This is the last slide, I promise you. This is kind of like I don't know what you would call it, but it makes sense. Ultimately, you will fail as a trader if you look to the trading markets for affirmation of your need to feel good about yourself. If making money in the stock markets is what makes you feel good about yourself, you're in the wrong business. You've got to feel good about yourself before you start trading, or the market will eat you up. It will eat you up. It will, because you're going to have strings of 5 or 6 losing trades. Who's had 5 losing trades in a row before? Has anybody had? Yeah. It's hard, isn't it? It's hard to do that. It's hard to go through that. But if you've got an effective strategy and you stick to your guns and you stick to something that you have effectively used in the past, and you stick to those rules with the discipline, then you know that you're going to come out winning on the end. So that's just a little bit of a look at fear and greed, and it's part of what we cover in the coaching. This is what I'll be talking about on the stock trading coaching program. 10 things you must do before you're ready to trade with discipline. As part of that is all that in your zone. Self-analysis, how to go about modifying your trading behavior. That's a hard one. The 5 deadly sins in trading, recognize them and manage them. So that's just some of the things that we'll be doing on the stock trading coaching program. So that's it. I'm run over my time. If you have any questions, fire them at me, or I'll be here for the next hour at least. You can catch me out the back here. Actually, you won't catch me out the back because I have to drive Richard's